A lot of busy professionals get interested in trading and then they immediately assume that means that they need to watch the charts all day, they need to day trade in and out, or just be glued to the market. And that is exactly why most of them either never start or they try it and they burn out fast. So in this video, I'm going to show you a low stress way to trade that can fit around your real schedule and why the right strategy matters more than most people realize. So what we're going to cover is why most busy people choose the wrong trading style, the simple chart concepts that matter most, and then how to build a low stress trading process around your schedule. So you do not need to be a full-time trader to actively manage part of your portfolio. You just need a strategy that matches your life. So let's jump right into it. And we're going to look at some charts that will help make this make sense. So, most busy professionals, we choose the wrong trading style right away. So I did this when I was first getting started. I think we all sort of gravitate towards day trading and actively trading in and out often when we think of trading. But we need to be honest about how much time we actually have to dedicate to this. And we need to stop assuming that day trading is the default path. I think it's easy to assume that. It's very popular. I personally did when I started looking into trading. I think we all go down that path, but we need to realize before you go in too deep that watching the market for hours a day is not realistic for most working adults. So we really need to choose a style that fits your schedule, not internet trading culture. And I think the sooner you do that, the less time you're going to waste investigating a strategy that's just never, ever going to work out for you based on your schedule, your family, and your work. So a lot of people, we get pulled towards day trading because, again, that gets a lot of attention online, but then real life kicks in, work, family, and so on, and it's just not going to work for us. So that does not mean that trading is off the table. It just means that we need a different approach. So I'm going to jump over to the charts, and I want to show you a few examples here. So this chart is the chart of the stock Tesla, and we're looking at what's called a weekly chart. So all of these candles represent 1 week. So we're looking at basically a span of 2 years. We're looking at May 2024 up until May 2026. And I've highlighted areas of potentially really good trades where, we bought in May 2024 around the low 200s, and then we sold here at, the 450 range near this all-time high. Then we rebought in April 2025 at around 220 or 240. And then we sold again at 470, 480. And then we bought back in recently here at around 350. So in the span of 2 years, you could possibly put on 5 trades using a strategy that doesn't require you to watch the market all day long. You can track things on a weekly basis, and you're not making many trades throughout the day, throughout the month, or throughout the year. Now, this is just one stock. Obviously, you would be tracking, as many as you want, and potentially you'd be doing more trading. But this is a strategy that can work for people that don't want to watch the market all day long. Now, when you compare that to more of a day trading strategy, this chart, all of these candles now represent 15 minutes. So we're looking at a span of just 1 week. This is, Monday, May 4th, all the way to Thursday, May 7th. And here are 5 possible trades that you could have done if you were using more of a day trading approach where, you're buying here in maybe the 380s, the low 380s, selling around 390, you're rebuying in at 380 or so, selling back here at the 410s, and then rebuying back in and so on. So here you've made 5 trades in a week versus this chart, you've made 5 trades in 2 years. Now, which approach do you think is going to require you to watch the market more often, be generally more stressful, and be prone to more mistakes? So you've made 5 trades here. However, the percentage gain on many of these is quite small. So you would need to constantly do this and not be wrong a large majority of the time to potentially get the same results of just making a few trades throughout the year. So it's a big difference. And this approach is generally better for a lot of people that are busy, that have busy schedules. So in point 2, we want to come to the realization that a low stress strategy can be built around your schedule, not urgency. So we really need to decide whether we want to review charts daily, if we have the time, weekly, or maybe even longer every month. And depending on how often you can review the charts, how often you want to, will dictate what strategy might work the best for you. Because then you can build your process around that time frame. Now, if we are trading less often and just looking at things maybe on a weekly basis, we really need to understand that patience is going to be a big part of the strategy. And this is actually a good thing. A lot of beginners start trading, and over trading is usually one of the first things that they do that can really hurt their account. So one of the biggest shifts for traders is just realizing that we don't need to react to everything in the market. If your strategy only works when you're glued to the screen, then it's probably not a good fit for a busy professional. So a schedule that may work a little bit better is one that I personally follow, where looking at a watch list like this. So I review this watch list every week. I look at the indexes, I look at the Mag 7 stocks, so Tesla, Google, NVIDIA, and then I look at quite a few stocks in different sectors. You don't need to look at this many. You can just look at a handful of stocks or just review the ones you have investments in, or over time, you may want to build out a watch list like this. And this is something I review generally every week thoroughly. And that allows me to spot opportunities and make potential buys and sells, but it doesn't require me to watch the market all day long. So this is just another example like that Tesla one we looked at with the stock called IRON, where we could have taken some profits in and around this area, and maybe we were patient and we rebought back in this area. So, a simple sell, take some profits, rebuy back in maybe 5 or 6 months when the opportunity comes. So less stressful, less requirements in terms of being on the screen. And, you can really make a strategy like this work by just doing what I do and reviewing things on more of a weekly type of basis. And that works well with my schedule. I've got a young family. I'm busy. I just can't be stressed about watching the market every single day. So when you do find a strategy, the key is to learn where to buy and where not to buy. So we want to sort of learn the basics of reading a price chart, and then we want to add in a few more tools. So we're not going to do this right now in this video, but below you can find a link to our free trading community on Skool. In this group, we do Q&A calls every week. And in the classroom section, we actually have a full strategy course that you can take for free that outlines the strategy that I personally follow. But some of the key points about applying a strategy and trading is that we want to keep it simple. We want to learn how to read a price chart. We want to identify what's called a support zone. So that's where an area where buyers are going to step in. That's where we also want to buy. We want to identify a resistance area. So that is where you might want to be cautious or you might want to take profits. And then we want to just focus on buying zones, not perfect prices. So when you're day trading and you're trading often, you need to, buy the perfect entry because you don't have a lot of wiggle room, so to speak, with some of those strategies. But when you're just buying on a weekly basis or you're not trading in and out so much, then it becomes more simpler because you do not need to predict each move. You can buy zones. You can understand where the probabilities are in your favor. And that just keeps everything much less stressful. So in those two examples we were looking at, here we identified some buy and sell zones. And one strategy tool that we use in our group is called the Gann Square. I'll just put this one on just for a quick demo. And basically, this tool allows us to really identify what were some great areas to buy with this diagonal line here acting as support, where you may have wanted to take some profits at this horizontal line. It was clear resistance, then buying back in and around this area in 245 in April 25, then taking profits again on this horizontal line when we couldn't break through. This is resistance. And then recently with Tesla buying back in around 350, looks like it was a great trade. So this is just one simple tool that you can review and combine with market structure, learning how to read and identify support and resistance. And this tool works really well for this particular stock. And this other one that we were looking at, IREN, if we want to apply this tool to this chart as well, then, it gave us some great opportunity to de-risk up in this zone. We are at resistance. And then back here, late March 2026, another area where we were clearly at support, and this stock is quite volatile. So in our strategy course, we go over how to apply that tool and a few others. We keep it simple, but once you understand the basics, you can start to layer in some more tools to help you identify where to buy and where not to buy. But the main rule that keeps trading low stress, no matter what strategy you are using, and specifically the one we do use, is that we only want to buy support and we never want to buy resistance. We want to be patient. We want to wait for the market to come to our levels, and we can use our schedule and rules to decide whether we buy, whether we wait, or whether we skip and do nothing altogether. And this is what makes this whole approach feel very calm and low stress. Instead of chasing, reacting, second guessing, over trading, and constantly watching the market, we just start working from a clear set of rules. We're patient, we let price come to us, and that changes and it creates a less emotional environment for trading where you can still actively manage your portfolio and earn great returns, but you don't need to be stuck and watching the market all day long. So just to recap here, if you're busy and you're not interested in a fast-paced trading style that won't fit your life, then the answer could be to focus on a strategy that matches your schedule. That's really important. One that uses higher quality entries as opposed to buying in and out all the time. One that focuses on understanding the basics of support and resistance, relies on some clear rules, and then really helps us stay patient when we trade instead of reactive and very active in the markets. That's going to give us great returns over time, and it's going to fit well with our schedule, and it's going to reduce our stress level. So that will make trading feel very realistic, sustainable, and again, much less stressful. So I hope this was useful. Thanks so much for watching. If you are interested in the strategy that we cover on this channel and that we cover in our group, then again, below this video, you can find a link to our free trading community. You can jump on a Q&A call. You can introduce yourself, share some charts, ask questions, and then get access to the classroom and the full trading course that goes over a course that really fits well with a lot of people with busy schedules. So I hope that you found this useful, and I will look forward to chatting with you in the next video.